Twitter chief Jack Dorsey quit his job for the crypto madness. So are millions of others. They are taking part in the exodus from the 9 to 5 to the realm of the crypto world. The cryptomania has only just begun. It has unleashed a historic burst in self-employment. Because of it, millions of people worldwide are striking out on their own. Due to it, millions of people worldwide are creating a shake-up in the world job market. Should you quit your job immediately and go full-time crypto? Watch this documentary to find out.
Mass vaccinations, eased restrictions, and reopened borders. If 2021 was the year the world turned the tide against COVID-19, what's to come in 2022?
The U.S. jobs report for September showed COVID continues to disrupt the labor market. The government employment was far lower than expected. One key reason, back-to-school hiring in public schools was lower than usual. But the report also underscores other complications in the labor market. The unemployment rate fell to 4.8%, but that was due in part to people leaving the labor force altogether. Job openings are at a record high and wages increased again last month as companies tried to attract new employees. More than 25 million people quit their jobs in the first 7 months of this year, and it is now being called the Great Resignation.
I'm done. I am not working here anymore. I don't feel safe.
40% of the global workforce intends to leave their job in this coming year.
But now a question you may be asking. How can so many people afford to resign?
I've been investing actually in cryptocurrency a little bit, and that's been increasing the amount of runway that I have.
At the end of July, there were a record 10.9 million job openings. And in a reopened economy, employers now scramble to find workers. Their challenge, a labor force that no longer accepts business as usual.
Businesses closing their doors, employees working crazy hours. It's all because of the so-called Great Resignation.
In August, more than 4 million workers quit their jobs, a record 20-year high. For millions of workers and businesses, the Great Resignation is a period that could define the future of American labor.
Weekly unemployment claims hit a stunning new high today, with 6.6 million Americans filing just last week.
As the pandemic spread, businesses shuttered their doors and tens of millions of people lost their jobs. To help workers and businesses stay afloat, the federal government began handing out relief payments for workers with demanding, lower-paying jobs. The pandemic relief payments may have made them less motivated to return. Some employers are offering higher wages and healthcare benefits to try and attract new workers. Still, many of these workers have started jobs in industries that have benefited from pandemic-driven shifts. Couriers and messenger jobs saw more than an 18% increase. COVID cases have declined since the September jobs report, and some economists are optimistic that more workers will return this fall. Still, others are concerned that labor shortages reflect longer-term shifts away from the workforce that won't reverse.
They have redefined what success means. So if you're leading them with your old school traditional values, they're not going to want to work for you. Of course they're going to resign.
Americans are reassessing the way they work. According to an August 2021 poll, more than half of workers surveyed said they plan to look for a new job in the coming year. 56% of respondents said adjustable working hours and remote work were a priority. In August 2021, almost 4.3 million Americans quit their job. The resignation rate hit a 20-year high of 2.9%. Dubbed the Great Resignation, the exodus of workers has left millions of jobs unfilled and created hiring challenges for companies. So what does the realignment of the workforce mean for employees and businesses? And what steps should you take before quitting your job? U.S. workers are leaving their jobs in droves. In August 2021, almost 4.3 million Americans handed in their resignation. But before quitting, financial planner Roger Ma advises to take a look at your financial situation and find out how much it costs to fund your lifestyle. The U.S. has seen a record number of people quit their jobs, but what's led to the boom in resignations? Several factors, according to Anthony Klotz, Associate Professor of Management at Texas A&M University. For starters, the pandemic forced Americans to take a hard look at their lives and reevaluate their careers. Working from home was another factor. According to Klotz, a number of people who worked remotely at the start of the pandemic have been unwilling to give up their autonomy. Burnout and mental health are another component. According to one survey, longer work weeks have become even more embedded in business culture, and the boundary between work and personal life has shrunk. More than 40% of workers at large U.S. companies said they had difficulty setting work and personal life boundaries, and almost 45% said they felt pressure to be reachable at all times. Businesses across the U.S. are struggling to find workers. In August 2021, there were 10.4 million job openings across the country. To entice workers back, employers have come up with incentives ranging from college tuition to signing bonuses. In August 2021, Target announced a program to pay 100% of its workers' college tuition. The big box retailer said in addition to tuition, it would cover textbooks and fees for employees pursuing 250 college programs at more than 40 institutions. Chipotle, Starbucks, and Walmart offer similar debt-free education programs. Other companies have boosted pay. McDonald's announced in May it was raising hourly wages at company-owned restaurants. Walmart, Under Armour, and Walgreens have announced similar pay hikes.
This is a story about money. A lot of money has been bet on cryptocurrencies.
This industry is the future of finance.
It's a wild west.
It's going to have to start playing by some rules. An anonymous person, Satoshi Nakamoto, person or persons we may never know who was involved in creating this project, came up with a way to reimagine money.
Some people say, well, we live in this world where there's all this fake money and I want to hold something that I know is limited.
If you get a £5 note out of your pocket, you will see it says on it, I promise to pay the bearer on demand the sum of £5, signed by the Bank of England. The reason that you think it's worth £5 and I think it's worth £5 is that we trust the Bank of England, we trust the UK government. Imagine a world where that establishment doesn't exist and you're not relying on these guys to tell you that that £5 is worth £5.
When you hold crypto, typically it's not protected in any way.
There's no one to turn to. If your money is gone, it is gone and you cannot get it back.
They liquidated my complete account. It was about $250,000 US, was just gone.
The question is what the regulator is actually trying to do. I'm not sure they know. Consumer protection is one thing, beyond putting a big flashing sign on it saying you can lose all your money. What can they do? Some operators, they crop up in one jurisdiction one day and they disappear the next. They label products one way one day and then they remove that label the next. They move around, it's very unclear where they're based. For regulators trying to pin them down and say, stop doing this thing in this jurisdiction, it is very much like a game of whack-a-mole. They pop up and they disappear.
All over the world, people are abandoning old forms of money and adopting new ones, like cryptocurrency, faster than our brains can process. The next stage in the evolution of money will be the rise of non-bank money, including cryptocurrencies, which are encrypted virtual currencies that exist in online ledgers. But the evolution could be rocky. Bitcoin and other volatile cryptocurrencies, while popular as speculative investments, by and large, aren't useful for everyday transactions, making them more akin to financial assets than to money. This is why governments worldwide are working hard on maintaining the public's confidence that their money is not entirely ephemeral. The two new kinds of money that are rising as cash falls are stablecoins and central bank digital currencies. Stablecoins, which like Bitcoin exist in virtual ledgers, are issued by private entities that promise to convert them on demand into government money or some other asset at a fixed exchange rate. The irony here is that cryptocurrencies were supposed to get us away from official money, whereas the ones that seem to work as a medium of exchange are backed by official money.
But why did the cryptocurrencies fail so far to do just that? And are they safe enough for you to quit your daytime job for a full-time crypto career? This is the multi-million-dollar question we're going to answer in this documentary. What you'll find out will blow your mind. In this documentary, we will show you how you can become an overnight millionaire once you quit your 9-to-5 and go full-time crypto. Don't go away. There's a lot coming your way.
You call me a saint, but you know I'm a stranger, all willing and able to do what you want. You think I'm a thinker, but I'm just a singer, all busy and pretty, just making believe. Boy, I'm falling, I'm falling, I'm falling, I'm falling, I'm falling down to obscurity.
In the US alone, the number of self-employed people has risen by more than 500,000 since the start of the pandemic to nearly 10 million. From May through to September, more than 20 million workers left their employers, and the quit rate increased by more than 6% ever since. A new type of career path has emerged, one known as the crypto career. Half of the Gen Z, aged 18 to 22, are choosing to start their careers in that world rather than full-time employment. A summer 2021 survey showed that 20% of people working remotely during the pandemic were considering leaving their jobs for freelance work, mostly crypto. According to LinkedIn, the number of members who indicated they are self-employed has quadrupled since the pandemic began to 2.2 million. But where are these workers going and why? This is the multi-million-dollar question which we're going to answer in this documentary.
Make it easy for you now. You got 2 minutes of my time, and I don't really break too easily.
Instagram, YouTube, and TikTok have provided new avenues to raise cash for young people. Robinhood markets and cryptocurrencies, such as Bitcoin, Ethereum, and a few other altcoins, have spurred a new generation of traders, some so successful they have quit their jobs to trade. But is this current shift to self-employment temporary? Finding good employees has always been a challenge. But these days, it's become harder than ever. And it is unlikely to improve anytime soon. Companies are feeling the pinch. An August 2021 survey found that 73% of 380 employers in America alone were facing difficulties attracting new employees. And 70% of them expected this difficulty to persist into 2022. Employee turnover is rising rapidly and may be the new normal employers are going to have to get used to in 2022 and perhaps beyond. But how are companies managing? It's been estimated that it costs an employer more than 120% of that employee's annual salary to find and train a replacement. That's why many are trying to develop new ways to keep their workers happy and in their jobs. They're learning to accept and adapt, and they're trying to manage the new normal. This may not be as easy as it sounds. A May 2021 survey found that 54% of employees surveyed from around the world would consider leaving their job if they were not afforded some form of flexibility in where and when they work. And as the potential workforce goes crypto, employers stuck in the past may be losing out. They are desperately seeking workers to fill open positions. But will they ever succeed? There's an under-the-radar reason contributing to the workforce shortages. It's the opportunities created by cryptocurrency. A recent poll reports that 11% of workers have either quit their jobs or know someone who has quit their job as a result of their crypto investments. What's more stunning is that 4% of the world's labor force have quit their jobs because of cryptocurrency investing. Technology is creating favorable opportunities for workers to take control of their own futures. Employers know about this development, but they're clueless on how to attract the new era of crypto-savvy employees back to their workplace. Opportunities presented by cryptocurrency and non-fungible tokens of NFTs are sucking workers away from the workplace. And this is not going to stop anytime soon. A large number of individuals have left the workforce after making early, or even more recent, investments in certain high-performing cryptocurrencies like Bitcoin, Ethereum, and Binance Coins, among others. Those who invested in Bitcoin, Ethereum, or other cryptocurrencies at the inception of the pandemic in March 2020 could be up anywhere from several hundred to 1,000%. Many in this category have decided to stay home and pursue other prospects rather than returning to work.
I'm somewhere in the middle, try to find myself again. But life is one big riddle of the future and what's been.
Cryptocurrencies are changing the workforce game with their ability to generate alternative income for their owners. They are incentivizing potential applicants to stay home rather than go to work. In August 2021, CNBC reported that a 12-year-old boy made $350,000 by creating and selling non-fungible token artworks he named Weird Whales. The largest NFT marketplace, OpenSea, recorded a sales volume of over $2.7 billion in a span of 30 days in 2021. This incredibly significant volume of sales has allowed people to become NFT day traders, purchasing NFTs and reselling them for profit. Similarly, people who can purchase high-demand NFTs directly from their creators have been able to flip them for significant profits, often the same day. On August 7, 2021, Veve Collectibles sold 1,000 secret rare Spider-Man NFTs for $400 each. They sold out in seconds and became available to purchase only from those lucky enough to get one from the drop. Earlier this fall, the cheapest one available in the Veve marketplace was already over $9,000. Then you have the more attractive play to earn NFT video games, which are gaining momentum by the hour. Blockchain-based video games, such as the immensely popular Axie Infinity, allow players to earn cryptocurrency by playing the game. They allow some gamers with low wages to earn full-time income while living a much more enjoyable life. To play Axie Infinity, users must have NFT video game characters called Axies or playable collectibles from the game. If a user purchases an Axie, they can play the game to earn cryptocurrency, which can be traded for actual money. In addition, the Axies can also be sold and resold, with the original owner getting a percentage of each subsequent resale. In one stark example, a rare Axie was sold for 300 Ethereums worth $130,000 and immediately relisted for over twice its initial cost. This is why many employees are willing to walk away from their jobs. For many, the thought of returning to the office, a daily commute, the 9-to-5 grind, and dealing with overbearing and micromanaging bosses has become totally undesirable. The ability to trade in cryptocurrency or NFTs, or even play video games from the comfort of their homes and on their schedule, is enticing enough, especially if these employees can earn close to, or even more, than their current salaries. But how is this shifting the very fabric of the world's society, especially among Generation Z? I'll answer this question and more in this third chapter. Don't go away.
You wouldn't understand it. Maybe something's missing inside of you.
According to a new survey, 58% of Generation Z are quitting work to go crypto full-time. Young people are increasingly seeing crypto as a way out of working their whole lives. The common perception of what defines a good job is steadily shifting. From hyperinflation concerns to work stress, over half of Gen Zs are increasingly seeing cryptocurrency as an escape route out of a lifetime of meaningful work. As such, the social fabric is shifting. By the end of August 2021, 10.4 million job openings were available to US workers. Surprisingly, 4.3 million workers quit their jobs, representing 2.9% of the workforce. This was the first time this trend came to be known as the Great Resignation. In China, the same phenomenon has been called lying flat. Prominent Chinese novelist Liao Zhengdu described it as a breakup from a cycle of horror. In today's society, our every move is monitored and every action criticized. Is there any more rebellious act than to simply lie flat? He asked. This spelled disaster for the world economy as we know it. This is when crypto space came in as the next level up project for young people seeking alternative forms of income. With crypto adoption, most job quitters did so to leave their low-income jobs. Those under $50,000 income are the most likely to quit jobs to earn from cryptos. But how much money can Generation Z earn through crypto? This is the multi-million-dollar question, which I'll answer in the following chapter. If you've been following crypto news recently, you may have noticed there is no shortage of profit-making opportunities in the market. Let me give you a simple example. If you were a crypto trader and had put $1,000 in a coin named Solana in August 2021, you would now be able to sell your tokens for $7,000. Imagine that. And that's just one example of many. Do you understand now why lie flat is here, and it's changing the labor market? And if you think this is happening only among Gen Zs, think again. Tech moguls are also getting bored and restless with their jobs, and they're striking out in search of adventure. Jack Dorsey quit Twitter for Bitcoin. Jeff Bezos' wanderlust led him to step down from Amazon this year and fulfill his childhood fantasy of going to space. Google's founders, Larry Page and Sergey Brin, stepped down in 2019 and have since been investing in futuristic projects like airships and flying taxis. Mark Zuckerberg is still running Facebook, but it's called Meta now. This is happening while crypto companies everywhere are expanding fast, so fast it can make your head spin. Big players, like Coinbase, employ at least 3,000 people. All are growing exponentially. All are hiring. In 2021, crypto investment bank Galaxy Digital increased its headcount by 130% to 510 people. In the next 2 to 3 years, even big banks will completely change their stance on crypto, and that will cause a huge sea change. Regardless of what's happening in the finance world or in Silicon Valley, what's happening in the real world with Generation Z and Millennials is a revolution and not a resignation. To them, the money is no longer worth the stress. What's more, the broader societal shift means that young workers are prioritizing their self-worth. They're trying out new things, taking advantage of new opportunities, and not sticking with the old bargain. If the pandemic revealed anything, it's how much young people hate their jobs. So, they've reinvented a new line of work. Now, most of them spend their days option trading, running a Twitter bot account that tracks Ethereum pricing, and dabbling in Web3 and cryptocurrency investments. And while they wouldn't describe themselves as happier now, knowing that they miss the social interaction of an office, their moods are becoming more neutral day after day, and they look forward to building their presence as an independent entity in which they can do whatever they want, whenever they want, no questions asked. I have no stress on the job compared to what I used to do, one millennial told this channel. He's not working full-time and has no concerns about money, thanks to his savings, investments, and a boom time in the crypto world. My goal is not to go back to having a boss, he said. He pointed out that he chose his mental health over income. He chose his financial freedom earned by investing in crypto assets. And he's not the only one to choose a new career path in life, one that's much different from the old one. Economists predict that the Great Resignation is only getting started, especially for Gen Z and millennial workers who are well positioned to find new ways to earn income. But how much are Zennials, or those aged 28 to 32, earning from trading in crypto?
Watch this next chapter to find out if the money is worth quitting your job. We'll be back right after this short commercial. Don't go away.
Have you ever clicked through to purchase an item from a website, such as a blog, news article, forum, discount code site, or social media post? This is affiliate marketing and refers to a sale being driven by a referral from another source, called a publisher, with the publisher rewarded a percentage of the sale in the form of a commission by the retailer, called an advertiser. So how is this journey tracked? Our affiliate network connects advertisers and publishers, tracks their journey using what's called an affiliate link, and rewards the publisher when a sale is made. Affiliate links can also be used to track additional performance metrics, including leads, clicks, and banner impressions. This is a useful tool when trying to monitor and improve the performance of your website. Because affiliate marketing rewards solely on performance and doesn't require personal data, it provides a simple, transparent, and reliable form of advertising for retailers by partnering with publishers and converting their audience into customers.
Clarity, 'cause there's too much noise around us. With clarity, 'cause there's too much noise around us. Just me.
Almost 2/3 of those who had quit their jobs due to mad gains earned under $50,000 per year, minus 27% of those earning less than $25,000, while 37% had a total income of between $25,000 and $50,000. Meanwhile, 15% of those tossing in jobs thanks to crypto had an income between $50,000 and $75,000, 13% between $75,000 and $150,000, and 8% with $150,000 or more. What this means is that crypto investments may have provided life-changing levels of income for some, while the wealthier owners of crypto use it more as another form of asset diversification rather than a source of income. Billionaire investor and crypto proponent Mark Cuban tweeted a link to the survey saying, 4% of people in the USA have quit their jobs because of crypto gains, and the vast majority made under $50K. Now we know why so many people quit low-paying jobs. 4% of the labor force. That's approximately 6 million people. It's even been reported that Americans who reinvested their stimulus checks in Bitcoin made nearly $4,500 in profit. The poll also found that 12% were seeking independence from government. No wonder Americans are leaving their jobs in droves. So, what steps should you take before quitting your job?
Watch this next chapter to find out what's next for crypto newbies.
What's a man got to do to get a woman like you? What's a man got to do to touch a woman like you?
Crypto is very silly. As a guest on Saturday Night Live, Elon Musk, the richest man on the globe, repeatedly joked about Dogecoin, a cryptocurrency itself created as a joke, and one now worth tens of billions of dollars. This summer, the NBA star Steph Curry spent 6 figures on a randomly generated drawing of an ape. There are countless memes and seemingly just as many scams. For a certain cohort of tech workers and creatives, though, crypto is also very serious. To them, it suggests a rosier future of the internet. If Web 2 is the internet now, controlled by a few big platforms, they're trying to build a decentralized Web 3. To get there, many are following their passion in a particularly banal way. They've made crypto their day job. They're quitting their 9-to-5 in Web 2 so that they can work 24/7 in Web 3. But is that a good thing? We've asked this question to a couple who recently quit their day jobs to do crypto full-time, and this is what they told us. Crypto's speed and intensity can be tough to keep up with. They admitted that their work-life balance is worse after quitting their jobs for crypto. They said they sometimes feel like rats on cocaine working in this space because there's so much happening. They even told us that they think about crypto while they sleep. These are the downsides to the fast-paced and high-risk world of crypto, but is there an upside to it? According to online publication Vice, there's today a Friends with Benefits or FWB, crypto-focused community known as a DAO, short for Decentralized Autonomous Organization. Essentially, it's a private club with its own cryptocurrency, $FWB. You'll need to own at least 75 tokens in order to join. There's a private Discord community, members-only parties around the globe, and, most recently launched, an editorial platform. You can sell your tokens if you decide to leave, though, potentially for great profit. What's amazing about it is that if you joined FWB in early July, it would have cost you just $550. But if you joined today, those same tokens would be worth over $9,000. Many are quitting their full-time jobs to work on FWB. They're optimistic that their work in crypto might lead to something better. Some of them are netting around $220,000 a year, with about half of it in tokens. Not bad for a Web3 job. But is it the same for everyone?
Thought you really loved me. Guess I was
The fear of missing out, or FOMO, on record high stock prices and the boom in cryptocurrency, or digital currencies, has pushed more young people around the world to try day trading and other kinds of investing for the first time. Those of them who kept their jobs during last year's COVID-19 recession and are flush with stimulus money and savings are now cashing in big on everything crypto. And it's easy to see why. Crypto mania and the wealth generated by it have drawn young people around the world to invest in it. The dream to become rich quickly seemed to them close at hand. But what they didn't realize, until a few days ago when the crypto market crashed, is that the drive to get in on the action comes with big risks. And while the do-it-yourself spirit of day traders is understandable given frustrations with low-paying retail jobs and distrust of big financial institutions, low levels of financial knowledge have left most young people at risk of losing more money than they can spare when markets turn volatile or crash. It's like a Las Vegas-style atmosphere where you're gambling and things can work out in your favor. But just as quickly they can turn against you. And like gambling, one of the newest yet most volatile forms of investments is now among the hottest. I'm talking cryptocurrencies. The majority of young people, who struggle with financial knowledge in general, don't fully grasp the finer points of this new asset. A recent survey by Harris Poll provided exclusively to USA Today found that 60% of US people say they are not very or not at all familiar with cryptocurrencies. This lack of financial literacy is costing young Americans millions. Worldwide, this could go up to billions. Young investors usually make two pivotal mistakes while trading cryptocurrencies. Their investing time horizon is too short and they're scooping up too many speculative assets in their portfolios that are risky, according to Joseph Bonaparte, Associate Professor of Finance at the University of Colorado, Denver. Cryptocurrencies can see wild swings within a day or even minutes, making day trading dangerous for small-time investors who lack knowledge about them. Most of them are oblivious of the golden rule in crypto investment. Never invest more than you're willing to lose. James Fielder, an adjunct professor of political science at Colorado State University who has studied Robinhood, wrote in a research paper that by delighting users, Robinhood creates players rather than investors. Robinhood, a popular American crypto and stock exchange, allows traders to directly link their savings accounts to its app, which could cause a novice trader dabbling in options or other risky trades to quickly lose their money. Then you have those who mine cryptocurrency using custom-built computers. Their electricity bills could average anywhere between $250 and $400 per month, leaving them with just enough money to live off their crypto mining profits. The fear of missing out is huge. This is why you should be more careful. If you want to gamble like in Vegas, only 2% of your portfolio should be in crypto assets, not 100%.